Lesson number 3, know when to sell and don't get emotional. Now, this is an interesting one and very recent for me because you could argue either way. Hold indefinitely, never sell, property only goes up, etc., etc. But I'm here to tell you that you might actually be better off selling and allocating capital elsewhere. Let's say you own a block of units and it's doubled in value. Great. But now let's say you have $1 million in equity, just to make the numbers easy. And because everything else is principal and interest now and the rates have gone up, it actually costs you 5 or so grand a year after all of your costs to hold it. Even if it becomes neutral for argument's sake, it still proves my point. Now, gurus will tell you, hey, it costs you very little and it's a tax offset and you have the upside of any future growth. But let's think about that capital allocation. That's a minus 0.5 return percent on your capital. Whereas if you had that same $1 million equity, but you put it into an ETF, you could be making 100K a year just by putting it in the markets. That's assuming you're going to get a 10% return. And yes, you do get the paper gain. So let's say that's gone up so much that it's worth between 1.5 and 2 mil. In theory, you're getting 150 to $200,000 a year in capital growth, but that's on paper gains and you don't realize anything until you sell it. So it's just one thing to weigh up and think about where are you best allocating your capital. So yes, you do get the paper gains of capital growth, but some years that's big and some years it's flat. So when you find yourself in this situation, maybe you're better off selling, paying your exit fees, and reallocating the capital to something that performs a bit better. The other downside is that you have over $1 million betting on one town or city, wherever that property is. That's a lot of money to have in one allocation or in one investment. It is just hard to let go. I'll admit that, because your property portfolio can be like your baby and you don't want to sell your baby. You worked hard for that and you still have to pay your exit fees, which is a downside. Buying property shouldn't be an emotional decision. It's the same with selling. Just cut the numbers, and if the math makes sense, then do it. Don't hold on to underperforming assets because you're attached to them. I actually lost money on a property because of this. It was the first property I owned, but it was tying up cash flow and borrowing capacity. So I sold it at a loss because I didn't want to carry that forward until maybe one day it went up in value. So I recycled the money into something else that made me a whole lot more than the 30K that I lost on that deal. You might lose the battle, but you will win the war.